So what exactly is the best way to both create cash flow in retirement and also on the other side, reduce volatility with your retirement portfolio? What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and in this video we are talking about another type of income ETF out there that can generate a lot of cash flow while also reducing volatility in your portfolio. In this video we are talking about the Nationwide Risk-Managed Income ETF, ticker symbol NUSI. We're going to talk about what this income ETF is. We're going to talk about the basic characteristics of this ETF, like the expense ratio and the dividend yield. We're also going to talk about the underlying holdings and the strategy that this fund utilizes to create cash flow while also reducing volatility in your portfolio. Then we're going to take a look at how this ETF performed against, yes, QQQ, but also an investment we talked about previously, QYLD. You guys know how much I love to talk about investing, about index funds, dividend stocks, cash flow, and everything in between. So if you appreciate that, hit the like button, hit that subscribe button, and let's get started. Hey guys, Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. All right, you guys know how much I value your time and I never want to waste it, so let's go ahead and jump right into the content. So we're talking about the Nationwide Risk-Managed Income ETF, NUSI. Some of the basic information you need to know: first off, it has an expense ratio of 0.68%, and it's trading as of the market close 5/21 of 2021, a price of $26.77 per share. With respect to the dividend yield, we'll scroll down here. The most recent distribution yield here, 7.83%, and it pays a monthly dividend. So remember, previously we talked about QYLD, which was a covered call ETF sporting a significant dividend yield of over 12%. NUSI is just a little bit different because yes, it does have the covered call aspect to it, but it also has some downside protection as well in the form of a protective put. Let's dive a little bit deeper though. According to NUSI's website, the fund is an income solution that targets high current income and seeks to provide investors with a measure of downside protection in falling markets and potential for upside participation in rising markets. So if we can look here from the infographic, it says that NUSI has both a covered call element to it as well as a protective put. Now remember, we've talked about previously with covered calls, what this is where you sell options based on your underlying holdings. And as the seller of the option, you are actually generating option premium that's being paid to you. That is the income generation aspect to all of this. But let's talk about downside protection. What NUSI does with a portion of that option premium it receives from the covered call is it goes out and it buys a protective put. Now, what does this accomplish here? Covered call generates additional income and a little bit limits the upside potential for the fund, but the protective put is just that. It protects against lower prices. Now, one of the things you should know here is NUSI is a relatively new ETF. It was launched in December of 2019, so we don't have a lot of data here. Make sure to stick around all the way to the end of the video, guys, because I'm going to show you just why NUSI is unique compared to both QQQ as well as QYLD with respect to downside protection. As you can see here, the NUSI Risk-Managed Income ETF has a 1 month return. Actually, let's just skip that. Year-to-date return 2.58% and a 1 year return of 13.18%. Since inception, December of 2019, 16.31%. So if I could sum up for you very briefly exactly what NUSI is, it's just like QYLD, but instead of taking all of that option premium and then distributing it to shareholders, it takes a portion of that premium and it buys a protective put, which brings balance and lower volatility to the portfolio. You'll also see that the dividend yield, as you might expect, given that there's less option premium being used and distributed, is lower at around 7% compared to the 12% with QYLD. Now with NUSI, it's buying, not selling, buying a protective put, which means that if the assets go down in value, then that put option gains value, which offsets some of the losses from the actual investments in the portfolio. Now, with all investments we talk about on this channel here, every investment is a tool to achieve an objective. So to achieve certain objectives, dividend stocks might be the right tool. To achieve other objectives, you might need to use index funds or potentially an income covered call ETF or an actively managed income ETF like NUSI. We have to know the objective before we can know what tool is best. So let's go and hop over here to the Excel spreadsheet. This is something that will be available to the Patreon community today if you're interested in taking a look at this spreadsheet. So what we've got is the actual day-to-day price history back from 12 of 2019 all the way through today. And we've got the lump sum option for investing here. And we've also got the monthly investment. So in this first column here, we've got NUSI with a lump sum investment of $250,000. We've got QYLD with a lump sum investment of $250,000. And then we have the Invesco QQQ Trust, ticker symbol QQQ, with a lump sum investment of $250,000. So what happens when we lump sum invest, and more importantly, what happens during COVID when we would expect to see significant drawdowns in our underlying investments? Let's take a look here. So we've got two different situations here. We've got the overall since inception, 12 of 2019 through today. We can see that QQQ definitely outpaces the other two, but we also know that QQQ is in a historic bull run. I want to be very clear with this. We're not trying to compare investments. What I want you guys to take away from this section of the video is how each fund performs differently from each other. So this is from inception, and this is the specific drawdown around COVID. So we can see here, like I said, QQQ strongly outperforms, and we've got NUSI that went up slightly from around 250 to about 270. And then we've got QYLD, which dropped down here and stayed relatively constant here, but lower than the other two investments. What I want to highlight here is this right here is a snapshot from this section right here, which is what happens when we have a significant drawdown, especially in this case due to COVID-19. What's fascinating here is we had a drawdown from all three investments, but you'll notice that QYLD and QQQ dropped down almost perfectly in sync with each other, whereas NUSI was able to go with a much more balanced performance throughout this process. And then over here, based on the dollar cost averaging, we can see that QQQ does come out ahead, but not by a lot. The orange line here for QQQ does eventually outpace NUSI. So what this means as the average Joe investor, we can know that NUSI can be a great fit for the average Joe investor out there looking to DIY approach their investments. As you can see here with NUSI, you get quite a bit of balance here. Yes, there was a small drawdown here during the COVID crisis in 2020. We had a little bit of a drawdown here, not by a bunch, and then pretty much straightforward after that, whereas QYLD dropped much further in the COVID time here, right over here, and has to eventually build it back. And then we have QQQ, which we know outperformed here, but we also know that it had a significant bull market, and it might not quite represent exactly what you would see in the future. Hopefully you found some value out of this video, guys. Just wanted to present to you full detail here on NUSI. It might be a great investment for you, especially if you have a large, significant investment up front. NUSI might be a great fit for your portfolio, or it might not be, but depending on your objectives, of course, and when you need the money. That's all I got for you guys in this video. Make sure to leave your 2 cents in the comments below. Let me know what you think about NUSI. Do you think it's an investment you should own in your own portfolio? What are some things you like most about it? And everything in between. Make sure to leave your 2 cents in the comments below. That's all I got for you guys. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.